Half a percentage point cut in interest rates may not sound like a lot, but it can have a big impact on the economy. And some people were certainly surprised.
And a half a point was not even on the table as early as the beginning of July.
Miro Kopik is a KPBS business commentator and founder of Bottom Line Marketing. He says one strong force behind the Fed's decision were falling inflation rates.
And they've been successful at bringing it down from 9.1% to 2.5% in the latest inflation report earlier this month.
The changes in inflation rates have been dramatic. This graph showing the cost of goods and services shows a huge dip during the pandemic of 2020, but then a tremendous boost in inflation 2 years ago, and then a dramatic drop again since then. And then the Fed had to address the weakening job market.
So during the post the pandemic, there were 12 million jobs, which was a record, and that is still a record at 8 million open jobs today. But it's certainly a lot less than it was at its peak.
The impact of the Fed rate cut on home mortgage interest rates is indirect but considerable. Stephanie Lloyd is a San Diego real estate broker. She says lower interest rates for home mortgages could lead to lower home prices, or maybe the opposite.
2021, when the rates were at historic lows, that created an absolute frenzy in the market, which then boosted the values. And so people were paying significantly higher than list price. So it's a balancing act here.
But if the Fed follows Wednesday's interest rate cut with one more in December and another in early 2025, it could really reduce mortgage payments if people refinance their homes. Kopik says those people could save as much as $12,000 a year on their home payments.
And, that's a lot of grocery dollars.
The next meeting of the Federal Reserve Board is coming up on December 18th. Thomas Fudge, KPBS News.